Welcome to Explain the Charts, where we break down the markets and help you make informed trading decisions. Today, October 28th, we're going over the latest news and analyzing the charts for Intel Corporation, a company going through a big turnaround. First, let's discuss what's happening with Intel. There's a lot of mixed signals surrounding Intel. On the one hand, the stock jumped over 3% on October 25th after a Motley Fool article claimed that Intel, Broadcom, and Taiwan Semiconductor stocks were popping. The article mentions Intel's improved product lineup, new CPUs, and partnerships for manufacturing. However, Intel's CEO could lose over $100 million in equity awards if the stock doesn't see a significant increase. This highlights the pressure Intel is facing, especially considering the recent layoff of 1,300 employees. The company's third-quarter earnings report is coming out this week, which will likely be a key factor in determining the direction of the stock. Overall, it seems that Intel is struggling to compete effectively in the semiconductor market, but the company is investing heavily in manufacturing, suggesting a potential turnaround. Now, let's move on to the charts to see what they tell us about Intel. The daily chart for Intel is showing a bit of a downward trend over the past few months. We can see that the stock has been bouncing between the $30 and $35 levels, but it hasn't been able to break above that resistance. There is a significant resistance level at $35, which the stock has struggled to surpass for a while. However, there's also a potential support level at $30, which could provide a floor for the stock. Looking at the overall chart, it seems like the stock could be moving toward a breakout, either up or down. The next few days will be crucial in determining the direction of the stock, especially with the upcoming earnings report. If the stock can break above the $35 resistance, it could signal a bullish breakout and a potential return to higher prices. But if the stock falls below the $30 support level, it could indicate a bearish breakout and a continuation of the downtrend. It's important to remember that this is just a technical analysis, and there are many factors that could influence the direction of the stock. Let's take a closer look at the 1-hour chart to see if we can get a clearer picture of the short-term trends. On the 1-hour chart, we can see a bit more volatility than on the daily chart. The stock has been moving in a narrow range for the past few weeks, bouncing between $22 and $23. There's a potential resistance level at $23, which the stock hasn't been able to break above recently. This could indicate that there's some selling pressure at that level. The stock seems to be finding support around $22, but it's important to note that this support level could be breached if the stock experiences a sharp sell-off. Let's narrow down the time frame on the 1-hour chart to see what happened on October 25th, the day the stock popped. This section of the 1-hour chart shows a sharp upward move on October 25th, likely influenced by the news about Intel's improved products and manufacturing plans. We can see a strong green candle which indicates a large buying volume. This suggests that investors were optimistic about the future of the company and they were willing to buy the stock at higher prices. The rally on October 25th could indicate a potential short-term bullish trend, but it's crucial to remember that this is still a volatile stock. The upcoming earnings report could either reinforce this short-term bullish trend or reverse it completely. Now, let's zoom in on the 15-minute chart to see if there are any more clues about the immediate future of Intel. The 15-minute chart shows a bit of back-and-forth action, with the stock bouncing between $22 and $23 for the past few hours. There's no clear trend emerging on this time frame, and the stock seems to be consolidating. This could indicate that investors are waiting for more information, possibly the upcoming earnings report, before making a decision. We can see some support levels at $22 and $22.50, which could provide some resistance for a further decline. But if the stock experiences a sudden increase in selling pressure, it could potentially break through these support levels. It's also worth noting that the recent volatility on the 1-hour and 15-minute charts could be a result of the upcoming earnings report. Investors are likely trying to position themselves ahead of the release, which could lead to more significant moves in both directions. In summary, Intel's stock, INTC, is currently in a state of uncertainty, with both bullish and bearish factors at play. The stock is facing challenges in the semiconductor market, but the company's investment in manufacturing could be a game changer. The daily chart suggests a potential breakout, either up or down, while the 1-hour chart shows short-term volatility. The 15-minute chart is showing consolidation, indicating that investors are likely waiting for more information. The upcoming earnings report will be a crucial event for Intel, and it could significantly impact the stock's direction. Keep an eye on the key price levels. Resistance at $35 on the daily chart and $23 on the 1-hour chart. Support at $30 on the daily chart and $22 on the 1-hour chart. These levels could provide crucial clues about the direction of the stock. Also, look for any significant news or events that could impact Intel's business. It's important to remember that these are just technical analysis insights, and there are many factors that can influence the stock market. Always do your own research and make informed decisions based on your own risk tolerance and investment goals. Thank you for watching Explain the Charts. We hope you found this analysis informative and helpful.